Guys, today we are going to discuss about one very important chapter of 10 plus 2, and it covers almost one third of the portion. So this chapter is none other than partnership, and you guys need to be painstaking and show some perseverance. Very important to pamper yourself with all the ingredients which you require. Points which we'll have to discuss, we are just going to move on with that one. So guys, we are going to move on with the partnership chapter, and there are some tricks which I am going to tell you, and very important, and you need to just practice them. Just watch the video carefully and follow those tips. Thank you so much. So guys, here we are with the very important chapter of 10 plus 2 in accountancy, that is partnership. And I'm just going to start it with its inceptions, ideal definitions, and the contents of it. It's very important to go through with that, and to acquire the necessary skill is very important, buddies. So here we are. Let's discuss about the definition of partnership at first. What is partnership? Partnership is the relation between two or more persons who carry on a business under an agreement for a profit motive. There should be at least two persons involved in it. Because this is partnership, you are not running a sole proprietorship, there should be at least two persons involved in it, and the maximum number of persons can be 50 as per the Partnership Act 1932, which is applicable in India. So this is the ideal definition of partnership. You can just learn it intently, and let's move on to the next segment, that is partnership deed. Look, whenever you are going to establish a partnership firm, then there should be a deed and agreement between the partners, because in future nobody wants a kind of dispute or any kind of a strife. So it's very important to just make an agreement initially. So what is partnership deed? Partnership deed is a written agreement between two or more persons who carry on a business. Under partnership deed, all the rights, duties, and the contents of the business are mentioned, like name of the firm and addresses, name and the address of the partners, nature of the business, profit and loss sharing ratios, etc. So these are the contents which you'll have to just inculcate. You'll have to imbibe in your mind. It's very important for theory segment. So what are the chapters which we'll have to discuss in partnership? The first one is basic concept, popularly known as fundamental of partnership. The second one belongs to reconstitution of partnership, that is change in PSR, profit sharing ratios, valuation of goodwill, admission of a partner, retirement or death of a partner, and the last but not the least, that is dissolution of partnership. These are the chapters which we will discuss one by one. Now we are proceeding with the basic concept. What we have to do in basic concept? Look, at first, you must have knowledge. You have already gone through with 10 plus 1. A trader used to draft trading account, PL account, and the balance sheet. Just like that, in a partnership firm, we used to draft them as well. So after getting the net profit or net loss, there are certain items which are to be adjusted. For that purpose, we will have to draft PL appropriation account. That's why I'm starting with the definition of what is PL appropriation account and why do we prepare it. So, after the preparation of profit and loss account of the partnership firm, there are certain items which are to be adjusted, like interest on capital, partner's salary, partner's commission, interest on partner's loan, and interest on drawings, etc. For this purpose, we wish to draft PL appropriation account to get the appropriate figure of divisible profit or loss of the firm. That is why PL appropriation account is also called the extended part of profit and loss account. How do we prepare it? What is the ideal specimen or format of PL appropriation account? Let me discuss about that. As I already told you that PL appropriation account is the extended part of profit and loss account. So whatever the profit or loss you are having at the time of drafting profit and loss account, that should be brought forward. If the firm has net profit, that will be brought forward in the credit side. If you are having loss, should be shown in the debit side, because PL appropriation account is just like nominal account. And in nominal account, you have already gone through with that debit all expenses and credit all incomes. So at first you'll have to show the net profit of the business, from which certain item like interest on loan, partners rent, if they have given their premises for the business, that should be adjusted. Manager's commission should be adjusted directly right here. And in debit side, if you are having loss, should be brought forward at first, and then certain items like interest on partners capital, partners commission, partners salaries. And then in credit side, you will have to show interest on drawings, because whenever the partners withdraws any sum from the business, they will have to pay interest, and that is an income from the business points of view, and these all are expenses from the business points of view. Now you'll have to adjust. If the credit side is higher, I mean income is higher and expenses is less, the difference between these two will be treated as divisible profit, and this amount will be distributed between all the partners in their respective ratio. And just vice versa, if you are having loss is higher, expenses is higher and income is less, that will be treated as divisible loss, and that should be distributed in partners, between the partners in their respective ratio as well. This is the balancing figure, either divisible profit or divisible loss, anything else you can get. Now we will proceed to the next segment of this chapter, that is interest on drawings, how to calculate interest on drawings, and then we will move on to the partner's capital. So keep watching the videos and you will go through with that one. Definitely will review the benefit at the end. Thank you.